Welcome back to XTRM Finance, where we decode financial decisions, sprinkle in some humor, and help you crush your money goals. Today's heavyweight matchup, buying versus renting. Is it better to buy a home and live the white picket fence dream? Or should you rent, keep your savings liquid, and avoid fixing leaky faucets at 2 a.m.? Oh, and don't forget Uncle Sam, he's waiting to tax every move you make. Stick around, because we're breaking this down into saving, investing, and taxes to help you figure out which option is best for you. Plus, if you're not already subscribed, hit that button and join our financial fam. Ready? Let's dive in. Let's start with the big question. Why does this matter so much? Well, housing is likely the biggest expense of your life. Whether you're buying or renting, it's not just about where you sleep, it's about your long-term financial health. Buying feels like a milestone. I'm an adult now, but it comes with risks and hidden costs. Renting can feel like throwing money away. But is it really? Oh, and by the way, both options can be good or terrible. It all depends on your goals, finances, and, let's be honest, whether you're ready to mow your own lawn. All right, let's talk about saving. Buying a home. You need a hefty upfront savings for the down payment, closing costs, and, don't forget, emergency repairs. Let's say you buy a $300,000 home with a 20% down payment. That's $60,000 upfront. Ouch. Oh, and property taxes and maintenance? Welcome to the club. You're now the proud owner of expenses you didn't budget for. Renting has a lower barrier to entry. First month's rent and a security deposit. Done. But, and this is a big but, you're not building equity. That rent check goes straight to your landlord's pocket. So basically, buying is like joining a gym. You're committed for the long haul and paying extra for stuff you might not use. Renting is like a Netflix subscription, flexible, but you don't own a thing. Here's where things get juicy. Investing. Buying a home. Think of your home as a forced savings plan. Every mortgage payment builds equity, plus real estate usually appreciates. But surprise, houses don't always go up in value. Renting frees up your cash flow to invest in literally anything else. Say you invest that $60,000 down payment into the stock market with an 8% annual return. After 10 years, you could have over $129,000. Buying can be a great investment if you're in it for the long haul and the market behaves. Renting can also make you rich if you actually invest the difference and don't blow it on avocado toast. Taxes, the uninvited guest to every financial decision. Buying a home, homeowners get tax breaks, mortgage interest deductions, and property tax deductions, only if combined is less than standard deductions. But heads up. The 2017 Tax Cuts and Jobs Act limited deductions for state and local taxes. Renting renters don't get tax perks, although standard deductions help. However, renters also avoid capital gains taxes when selling a property. More about this in other videos. Pro tip, always run the numbers with a tax pro. You don't want to realize too late that your dream home comes with a tax nightmare. Let's keep it real. Money isn't everything. Buying. You have stability. No one's kicking you out. You can paint your walls neon pink if you want, but there's less flexibility. Need to move for a job? Selling can be expensive and stressful. Renting is perfect for flexibility. New city, new apartment, no problem. But renters don't have control over rent hikes or lease renewals. So ask yourself, do you want freedom or stability? Do you want to own your space or not have to worry about fixing the water heater? Let's break this down with numbers, shall we? Buying a $300,000 home with a $1,600 monthly mortgage, plus taxes, insurance, and maintenance. Renting a comparable apartment for $1,200 per month, over 5 years. Home ownership costs around $125,000, but you gain equity. Renting costs around $72,000, but you have no equity and invest the difference. Winner? It depends. If the market appreciates and you stay long-term, buying wins. But if you're mobile and invest wisely, renting might come out ahead. Here are some classic mistakes people make. 1. Buying too early. Don't rush into homeownership if your finances aren't solid. 2. Not investing while renting. Renting only works if you're saving and investing the difference. 3. Ignoring maintenance costs. Your house will need repairs. Count on it. Pro tip. Think long-term and stay within your budget. A dream home isn't worth a nightmare budget. Before deciding, ask yourself, how long do I plan to stay? Do I have enough savings for a down payment and an emergency fund? Am I disciplined enough to invest the difference if I rent? How do taxes impact my choice? If you're staying put and love the idea of owning, buy. If you're unsure or prioritize flexibility, rent and invest smartly. All right, there you have it. Buying versus renting with a side of saving, investing, and taxes. What do you think? Are you team buy that dream home or team rent and invest? Let me know in the comments below. If you found this video helpful or at least mildly entertaining, smash that like button, share it with a friend, and don't forget to subscribe for more financial wisdom with a dash of humor. Thanks for watching XTRM Finance, where we turn money mysteries into financial clarity. See you in the next video.